Let's explore this tax situation where three individuals are starting a company and we're asked to determine the amount of gain that each owner is required to recognize. And they give us a little hint here, you can see right here, to focus on sections 351 and 721. Okay, so I'll read the situation. Mickey, Michaela, and Taylor are starting a new business. MMT makes sense. To get the business started, Mickey is contributing $230,000 for a 40% ownership interest. Michaela is contributing a building with a value of $230,000 and a tax basis of $157,500 for a 40% ownership interest. And Taylor is contributing legal services for a 20% ownership interest. All right, then again, what's the question? What amount of gain is required? What amount of gain is each owner required to recognize under each of the following alternative situations? So let's explore the first situation. The first situation, let me slide this down, got the whole thing slid up here, is if it's formed as a C corporation. Okay, and if it's formed as a C corporation, Mickey doesn't record any gain, nor does Michaela, but Taylor does. Well, let's figure out why. Let me slide this down again. This thing wants to move on me. Slide back up so we can see this. All right, so now I've got it positioned so it won't move on us too badly. Okay, so why? Under section 351, Mickey and Michaela do not recognize any gain, but Taylor does because he or she is contributing services, and services are not property. So Taylor must recognize $115,000 of ordinary income on the receipt of the $115,000 worth of stock she receives. So now we know Taylor is female. So how do we do that calculation? Well, you take the values that were contributed, and which comes to a total of $460,000, and then you divide it by the 80% to come up with what the equivalent total value or total worth is times the 20%. Okay, so you can see the math at the bottom of the screen. Okay, now I've repositioned the screen again so we see the question, and now we're going to tackle the question of what's the gain that we need to recognize, or each owner needs to recognize if this is formed as an S corporation. Let me remove that. And you can see now Taylor has to record $115,000. It's the same as before because under section 351, Mickey and Michaela don't record any gain, but Taylor contributes services. Services are not property. So Taylor has to record $150,000 of ordinary income on the receipt of the $115,000 worth of stock she receives. Okay, and again, I've just added the calculation, which is the same as before, so you can see how you would complete that calculation.